Hello, everyone. So, today I want to talk about how to use multiple time frame analysis in your trading. Okay. There's one thing I ask you take away from this open house. It's this right here. Because I think this can be applied to almost any trading methodology out there to kind of help increase the probability of your trades following through. I mean, this was a game changer for me after I had my aha moment with this concept. All right. And once you understand this concept, you'll be able to determine who has the upper hand in that moment in time. And it'll almost feel like you're able to, quote unquote, bet on the winning team in the fourth quarter of a game. And it's because you're just getting more signals and more confirmation of the direction you're trying to play. All right. There's more evidence for you as we're kind of playing detective in the crime scene of these gaps, right? Now, having said that, even though it's obvious who may be winning, that doesn't really mean it's a guarantee they'll actually win the game because anything can happen in that fourth quarter. And there's nothing that's 100% certain in trading, right? But your odds of the direction you're playing does greatly increase. And this is a common mistake I see with beginner traders, and why a lot of traders fail is because they kind of hone in on just one time frame. And once they see a setup they like, they may trade it without paying attention to what's going on with its smaller or higher time frames, because price doesn't operate in a vacuum, which means we shouldn't be analyzing price action in a vacuum. We have to be able to look at it from all angles, meaning not just one time frame but multiple. And by doing so, it tells us a much more complete story of where price is going next. So how do we do that, and what are we looking for exactly? Well, what we're looking for is multiple time frame alignment. You want to have the same bias on multiple charts of the stock you're looking to trade. So if you're getting into a buy setup, you want the charts to look higher in multiple time frames. And if you're getting to something short, like in this example, you want it to look lower on multiple time frames. You want them to be aligned in the direction you're playing, which gives you more momentum, more confirmation, and more probability of it working out. Now, it's not common to get all the time frames to look perfect all the time. So the best way to go about this is to at least go down to the one time frame lower from the current time frame you're trading, just to validate those entries. Now, that doesn't mean to ignore all the other time frames. I think it does take some ability and understanding of chart reading to take full advantage of this concept, but that's exactly what I'm going to try to give you a bit of today. All right. So for my intraday charts, I like to use the 1, 2, 5, and 15 minute. I also have the hourly. So anytime I bring up a stock, these are the 5 time frames I'm looking at for my intraday charts. And if I'm looking to swing trade, I'll do the hourly, daily, weekly, and monthly charts. But I have all 8 of these time frames open at all times to analyze whatever I'm looking at. All right. So I mentioned you should check the one time frame lower you're trading on, right? And for me, the primary time frame I focus on changes as the day goes on. So if you see here, this is my schedule for the time frame I focus on throughout the day. So from the open to 10 a.m., this is Eastern time, by the way. The setups I'm looking for is off the 1 minute chart. From 10 to 10:30, I shift my focus to scanning for 2 minute setups. Then for 10:30 to 11:30, maybe even to like 12, I look for 5 minute setups. Then the rest of the day is off the 15 minute. And I move up time frames because if I were to just stick with the 1 minute all day, it just gets too cluttered and hard to analyze because there's just too many candles, right? So as the candles are forming, I like to condense that information and look for patterns on higher time frames as the day goes on. So when I say one time frame lower, I'm referring to the primary time frame I'm trading at the time, and then one time frame lower from that. So if I'm playing a setup off the 2 minute, I'm checking the 1 minute. If I'm playing it off the 5, I'll check the 2 minute to make sure that's aligned. in the afternoons off the 15, I'll check on the 5 before I enter any trades. So check the one time frame lower than what you're trading on to validate your entries. All right, let's get into some real examples here. So I decided to grab some real examples from the past couple of days so that, if you've been hanging out with us this past week, these charts will be more familiar and more easier to digest, I hope. So this is SPWR from yesterday. So we had it on the list in the afternoon as a 15-minute buy setup. And the only indicators I use on my charts is the 20-period moving average, which is the blue line, and the 200, which is the orange line. So we have a bullish stock that pulled back into the rising 20 and looks like a pretty clean buy setup. But before we get into the trade, let's look at the one time frame lower and see what that looks like. So here's the 5. It looks like the price has been trading above the 20, starting to point up. Looks like it wants to break out and looks higher. So we do have time frame alignment. So it looks like we're good to go. So that's all we're looking at. So all we're looking for is to have time frame alignment on both of these charts. Here's another buy setup. This was NEE off the 5 this time. Here we have a bit of a deeper pullback. We're a bit extended off the 5. I know some of you played it yesterday. Let's see what the one time frame lower looked like, which in this case is the 2-minute. So we see that the deep pullback did in fact cause the price to get under it, right? But it did hold up and now shifting its momentum back up to the upside right about here. So we do have time frame alignment, right? Making that a valid entry point off the 5-minute buy setup. See how the candles are kind of trading above it now. It was under it, now above it with the 20 MA curling up. Okay, let's look at one more. So this one, so here's a 15-minute sell setup. This was the BWV, also from yesterday. Now a pretty clean sell setup here, but this one also looks like a bit of a deep pullback. Let's check the one time frame lower, which is the 5-minute. So it looks like the sell setup is triggering into that 5-minute 20 MA, which is curling up now with prices trading above it. So the 5-minute lost that downtrend, and we now have conflicting timeframes. The reason why we don't like conflicting timeframes is because now it's like a tie game in the fourth quarter, right? I'm not sure which timeframe is going to follow through. Is it this 15-minute sell setup that's in a downtrend? Or is it this 5-minute that's transitioned into an uptrend? And as you can see, in this case, the 5-minute hit the game winner to get that follow through to the upside, making that initial 15-minute sell setup fail. So by being aware of what's going on in more than one time frame, it can keep you out of trouble and it could keep you out of trades that make you sweat. So what I really want to get into today is what to do about these conflicting timeframes and how we can still trade them. Because if you have time frame alignment, you're good to go. There's nothing much else to really discuss. It's the ones with the discrepancies that we need to know how to get around, right? So there's 3 scenarios we can look for to still trade setups with conflicting timeframes. And the first way is to look for a buy setup or sell setup failure, depending on which direction you're trying to play. Second is the higher low or lower high entry. And the third is the mini climactic entry. Let's go over these one by one. So first is the buy or sell setup failure. So let's say on the primary time frame you have this nice buy setup, but on the lower time frame, it looks like a sell setup is forming. So what you can look for is a failure pattern in that conflicting time frame. So in this case, let that sell setup trigger, and that failure can be an entry point for your primary time frame, right? That sell setup failure is going to cause that downtrend to break, which means you'll now have a better alignment on your time frames. So here's an example. So we have a buy setup on the primary time frame, but a downtrend on the lower time frame. So, as this buy setup's triggering, it's into that declining 20 on the smaller time frame and with candles underneath it. So let's let that first buy setup go, right? And look for a sell setup failure on that conflicting time frame. So if you see here, we see that the sell setup off the 2 minute in this case did trigger and then now failed, right? And now we can look to get into the original buy setup, which is giving us a 1-2-3 pattern now. So we can always wait for a little bit for more confirmation, wait for secondary entries, and see if that conflicting time frame is going to fail before jumping into trades blindly. And here's a sell setup, sell setup on Upwork from yesterday. Here we have a breakout failure off the smaller time frame. So you see it popped, went over that 20 MA, tried to break out, failed, back down to the base. And once that base breaks down, it will start that downtrend again on the smaller time frame, making that primary time frame entry valid. All right. And as you can see, worked pretty nicely. And here's one more. This is T-Doc off the 15-minute sell setup. Didn't have time frame alignment. Now this is a secondary entry here. So we did let that first buy setup on the lower time frame trigger, making it print that green bar on the primary time frame. And under that, now that it's formed that little 1, 2, 3, can be your secondary entry, because that would mean that the buy setup here off the smaller time frame would be failing once we break under that green bar's low, right? And in this case, you would have saved yourself some money from the initial sell setup entry, because it ended up double bottoming on the conflicting time frame, following through on that buy setup. So it would have never triggered for us, right? So it kept us out of trouble. So that's one scenario, is to wait for a buy or sell setup failure on that conflicting time frame. Okay. Now the second scenario is the higher low or lower high entry. So here is the same buy setup from the last one, but in this scenario, the chart on the smaller time frame is also in a downtrend, but instead of giving a sell setup, it just decides to break that downtrend on a strong bounce. It pops over that 20 MA and starts to form a pivot, or what we call a higher low, meaning a higher pivot than the previous pivot. So let's take a look at an example here. This is EMPH. Again, these are all charts from this week. Buy setup forming off the 15, but 5-minute is in a downtrend. So not quite ready yet, but what happens here is the igniting bar to trigger the buy setup off the 15 broke that downtrend off the 5-minute. So it's rallying above the 20 MA and pulling back into it, forming that higher low. The candles are above the 20 now and starting to curl up, which produces another 1, 2, 3 entry off the 15-minute. So we're just looking for more signals that tells us this buy setup does want to, in fact, move higher. And we're just kind of waiting to see if the lagging time frame can catch up before we get into it. So that's another way we can see failures on the smaller time frame. Now, the third and last scenario is the mini climactic entry. This is probably the least common you'll come across, but what happens on the conflicting time frame is it goes a bit climactic, meaning there's acceleration to the downside and extension from the 20. So in this case, you don't really need to wait for a secondary entry on your primary time frame, because the lower time frame has room to correct to that 20 MA. So it's a bit of a more aggressive entry, but at least in here, you have room to work with to the upside. And what's great about this is when it does work, you're in it from a great entry price. So Here's an example. This was FISV from earlier this week. We see a pullback right into the rising 20 off of the primary time frame there, and we see the lower time frame is in a downtrend. But we are extended off the 20 MA. Now it's not the best climactic example, I would say. I would have loved to see more acceleration and volume, but just try to understand the concept and not so much the picture. All right. So as this buy setup triggers with the lower time frame possibly bottoming because it went a bit climactic, it had room to move up to the 20 MA, breaking that downtrend, and now kind of looks like combination from scenario 1 and 2, right? So it kind of broke this downtrend, got the pullback into that over that 20 MA, had a little sell set of failure here, and you know now you kind of have a secondary entry that you can possibly add and reduce to. So from the original entry you got it at down here. Now this is an opportunity to kind of add and reduce your position for possibly bigger gains. Now remember, this only applies when the conflicting time frame goes a bit climactic, and it's extended for this to be valid. All right. So those are the three main things to look for when trying to enter setups that have no time frame alignment: the buy setup failure, higher low, and the climactic. All right. So just make sure to check all of your time frames. And I like to think of multiple time frame alignment as a square, because no matter what angle you look at it, it should be the right angle. So hope you guys got something out of it, and thank you.